So obviously you've been active in Africa for the last decade in many respects, very active across the spectrum of sectors from infrastructure to agriculture to resources, ICT. You've chosen to do this through 3 funds periodically. Explain how it's worked.
Well, we follow a kind of typical private equity model. We raise a pool of capital from our investors, and then we typically have several years to invest that money into good growth companies. We then sell those, make a profit, and raise a new fund. So we have been able to do this, and now in our third large Pan-African fund, and so far it's been quite successful.
Is it really? Because obviously we know that at the moment investors are jittery, holding back, they're risk averse, and it's very difficult, certainly in 2011, to close deals. Are you closing any deals this year? Are investors continuing to put their money through the 3rd phase of the Africa Fund?
Yes, they are. We actually, you can see at this conference here in London, a good interest in Africa for long-term investors who are looking for where the growth is going to be over the next 5 to 10 years in the world. Africa is a place to be. You know, we're going to have 5% growth across the continent this year, should be the same next year. 7 out of the 10 fastest growing economies in the world over the next 5 years will be in Africa. So investors still need to invest, they need to put money to work, and they're looking for their growth markets to do that, and that means Africa.
All right, obviously you give us a macro picture that Africa in general shows steady growth despite what we're seeing in other developed economies. But what does that mean at a company level? Because ultimately you're investing in companies trying to increase their value before you sell off and make a profit. I mean, what sort of companies in these times are showing very good EBITDAs, for instance?
Well, we have quite a wide portfolio at ECP. We've made over 50 investments in Africa. We have over 20 portfolio companies now operating in about 40 different countries in Africa. So we can see very broadly how companies are doing that. We have, many of our companies are still getting quite good rates of growth even in these slower markets. We're helped, and Africa in general is helped by not having some of the debt problems at the country level or the company level or the individual level that are plaguing the developed markets. So in a variety of our businesses, in electricity distribution, in diaper manufacturing, in cell phones, many of our businesses, a wide variety, are still getting good growth rates here. Finally, too, the general tight markets that we're still having in commodities are helping some of our companies that are focused in that area, but also helping to support the African economies in this situation.
I like the diaper manufacturing. I must be honest. All right, give us a sense of give us a sense of which regions for you are exciting, because you are active, for instance, in financial services in Central Africa and Francophone Africa, countries like Gabon, for instance, and then you're also involved quite actively in agro businesses in West Africa. Just give us a sense of, for you, this is where the growth is, this is where we're going off the beaten track, because I'm fascinated that your portfolio doesn't show a heavy emphasis on resources, which is what most people tend to do when they come into Africa.
Well, yes. I mean, at ECP we really think that the big part of the play is in the developing consumer markets in Africa. And much of our investment has gone to there. We're, for instance, in broadband, television, pay TV. These type of businesses have a lot of growth left in them, and you know, I think the opportunities are quite good in those markets. And really, the number of consumers, we have a bigger middle class in Africa than we have in India, and you know, really. Tens of millions of people looking for more services, and that growth is getting money in their pockets, and they're looking to buy these things. I think it's going to move on in the next 5 years or so. We're going to see more interest in retailing, fast food restaurants, a variety of areas like that, which are really untouched and these business models are going to be coming to Africa.
Finally, Hurley, the challenges. Obviously, you buy a company that shows potential, but you've got to give it that added impetus, possibly even take it to list to create a little bit more cash value for it. What are some of the challenges you've experienced, and how do you overcome them?
Well, you know, at ECP, we have helped a variety of type of companies grow. We see some of the same challenges that you see anywhere handling growth. Building up the management teams, learning to operate across borders and in different regulatory environments. In the end, you know, those are very key challenges. Also financing, getting good financing, getting financing at reasonable levels has continued to be a challenge and will continue to be a challenge, and that's an area that at ECP we're able to help our companies with it as well.
Okay, and then finally, going into 2012, your outlook, because even if you're saying, you know, at the conference right now, there's renewed interest in people wanting to come into Africa, we just do know that investors, particularly from Europe and the United States, are really concerned about the state of their domestic economies and wanting to look for high-yielding assets in those economies, at least to support growth indigenously as opposed to looking out. Is that a trend that's playing itself out?
Yes, there certainly is some of that, and there's certainly no wall of money washing over Africa at the moment. But as I said, I think the interest is continuing to grow in there. It's not a very big market, so you know, the interest that we see is very good for the size of market we have. I think we are remain optimistic about the African economy in general, which is the underpinning of our performance, and our ability to find good companies and good investments in 2012 as well.